Hello student, this is Ankish Shukla, and from today's class we are going to start a new chapter, that is chapter number 11, Bank Reconciliation Statement. Before moving to the concept point, firstly let's understand what is the meaning of Bank Reconciliation Statement and what is the need to prepare Bank Reconciliation Statement. We are knowing that we prepare cash book, right? And in cash book, if you remember, in cash book there are two sides, right? One is debit side, other one is credit side. On the debit side, we keep two amount column, one for cash, other for bank. Same way on the credit side also, we prepare a cash and bank one. Sometimes we prepare discount column also on both sides, that is a 3-column cash. But here we are talking only about this bank column. Now what cash books bank column represent? Cash books bank column record all the transactions related to bank. On the debit side of cash book bank column, we record all the receipts in our bank account. Whatever money is deposited in our bank account through any medium will be recorded on the debit side of cash book in bank column. Same way, whatever money has been withdrawn from your bank account will be recorded on the credit side of bank column. Okay, so on the basis of this, we can say that whatever the balance you will get, whatever the balance CD you will get from this bank column, this will be the actual balance in your bank account, right? Okay, because this should be our actual balance in that is actually present at the current time in our bank account. Because we have recorded all the receipts and we have recorded all the payment, so whatever the balance we will get, that should be the exact balance appearing in our bank account. So that is a kind of, you can say, a statement or records of all the transaction of our bank account, okay, which was prepared by our accountant. Same way, bank also prepare a record of all the transactions from your bank account, and that is passbook. What is passbook? We are knowing passbook is a kind of record or a statement where all the transactions from our bank account is recorded. Whatever the money we have deposited, whatever the money we have withdrawn, whatever the check we have given, all the receipts, all the payments through our bank account is already recorded in passbook. But the difference is, this cash book is prepared by us, passbook is prepared by bank. But both things, whether it is cash book bank column or passbook, will show the exact balance, will show the same balance, because in both the places we have recorded the same transaction. Okay, so technically we can say that our cash book bank column balance will always be equal to passbook bank column balance. Due to some reason, sometimes it happens that our cash book bank column balance will not get matched with passbook balance. Okay, now there can be many reasons because of which our cash book will not match with passbook, but we will talk about those reasons later, that what are the reasons. But firstly, let's understand what is bank reconciliation statement. So bank reconciliation statement is a statement which is prepared to reconcile, to correct the differences which we are getting between cash book bank column and passbook. Because as both are the record of same transaction, both balance, passbook and cash book should be matched. But if it is not getting matched due to some reason, we prepare a statement known as bank reconciliation statement, which will help you to understand those differences and to correct those differences. So I hope the meaning of bank reconciliation statement is clear to you. It is a statement which is prepared to correct the differences between cash book bank column and passbook. Now, before understanding how we can prepare that bank reconciliation statement, firstly we need to understand what can be those differences, what are the types of differences. But before understanding differences also, let's see one more. In our cash book bank bank column, right, there can be either a positive balance or a negative balance. When we have a positive balance in our bank account, that positive balance, if we are recording in cash book, that positive balance is known as a debit balance. Okay, but if we are having a negative balance in our bank column, when we have a negative balance, see, there is a facility called overdraft. When bank give the benefit of overdraft to its customer, the customer have a benefit that they can withdraw more money that is available in your bank account. Let's suppose you have a balance of 1000 rupees and you have an overdraft limit of 5000 rupees. That means you can, even if in your account there is only 1000 rupees, you can withdraw 6000 because there is a limit of 5000 of overdraft. But you decided to withdraw 3000. So 1000 you have withdrawn from your balance. Now your account balance is 0, but you have withdrawn 1000 more, let's suppose. So at present time, your account balance will be 1000 negative balance. This negative balance is known as a overdraft. Okay, and if we are having a cash book credit side balance, so the credit balance of cash book is known as a negative balance. Okay, now whenever we have a positive balance, we say that we have actually a balance. But whenever we have a negative balance or credit balance, we say that we have not a balance, actually we have a overdraft. So here we are referring balance for a positive balance only. If we are having a negative balance, we will not say balance or negative balance, we will say we are having a overdraft, right? Now whatever thing we assume as a debit balance, passbook assume the same thing as a credit balance. Okay, so that means if we are saying that sir, cash book's debit balance is a balance, right? Cash book's debit balance is a balance. Balance means we have a positive balance. But cash book's credit balance is a negative balance, and we call it a overdraft, right? Okay. But when we talk about passbook, whatever the thing you write on the debit side, passbook records same thing on the credit side. Whenever we will get money, we will record in cash book debit side. But in passbook, that will be recorded on the credit side. So we can say that if we are having a passbook's credit balance, that will be a balance actually, opposite of cash book. And if we are having a passbook's debit balance, that is a negative balance, and that is known as OD or overdraft. So you can see here the passbook is totally opposite of cash book. Cash book's debit balance is balance, cash book credit balance is overdraft, passbook's credit balance is balance, and passbook's debit balance is overdraft. Now this thing is necessary for you, so I hope you will learn this or you will remember this. In question, we have only one from these four will be given. Either you have cash book debit is given, or passbook credit is given, or any one of these given. Okay, and you will do some adjustment, and you have to reach on passbook's balance. Like if you have cash book information is given, whether debit or credit, you have to reach on passbook. But if your passbook is given, you have to reach on cash, right? Okay. So I hope this point is also clear. Now let's understand what can be the reasons due to which our cash book bank column will not get matched with passbook balance. Now there can be various reasons due to which our cash book bank column will not get matched with passbook, and that is given in your book. You can read it by yourself, but we will discuss few points. Like let's suppose you have issued a check to someone. Issuing check means we are writing a check, we have to make someone a payment, and we have given check to that person, right? So whenever you will give check to someone, firstly you will deduct that amount in your cash book. So you have deducted some amount in your cash you have given check to that person. Is it correct? Okay. Now after deducting your balance in cash book, you have given check to that person. Now that person will take that check into your bank. He will deposit that check. Bank will make the payment and bank will also decrease your balance. So your balance will match. Okay. Now but suppose what will happen if you issue the check, you deducted your balance, but that check is not presented in bank for payment. If that check is not presented for payment in bank, bank will not decrease. Bank will keep the balance same because bank is not knowing that you made the payment, right? So you have decreased balance, but bank has not decreased. That's why we are getting a difference between passbook and cash. This is the difference. Okay, right. So this is a one reason. There can be other reasons also. Like let's suppose you receive the check from someone, right? You receive a payment from someone in check. You increase your balance in cash book. You send that check into bank. But when bank checked that person's bank account, there was no balance. That check got dishonored. That check got bounced. So when the check got bounced, the bank will not increase your balance because bank have not received any payment from that check. But you have already increased before sending that check into bank. First you will increase your balance, then you will send that check into bank. But bank will not increase because there was no money in that person's bank account. Check got dishonored, so we are getting a difference. There can be other reasons also, like bank has given you an interest. So bank will increase your balance, but you have no information that bank has given some interest. So you will not increase your balance, right? So in that case also you will get a difference. Like bank applied some charge, or bank is not giving you interest, but bank is charging interest on that overdraft on that negative balance. So bank will deduct your balance, but you have no information, so there you have not deducted. So we are getting a difference. So this way there can be various reasons due to which our cash book balance will not get matched with passbook balance. So we prepare a statement known as bank reconciliation statement, which help us to correct that differences we are getting between cash book and passbook. So now let's understand how we can prepare bank reconciliation statement. So this is the format of bank reconciliation statement, where we firstly write the name of the statement, which is bank reconciliation statement. After it, we normally write as at the date at which we are preparing that bank reconciliation statement. Then we are having three columns. First one is particulars, in which we will write those details, those reasons of differences. Okay. Then we have two columns for amount. First one is a plus column, second one is a minus column. Okay, we will talk about that, what we have to write there. Okay. Now see one thing. Let's suppose we continue with the same example. We issued a check to someone. So at the time of issuing check, first we will deduct our balance. Let's suppose this is a cash book, this is a passbook, right? So earlier both things are equal. We issued a check to someone, so first we will deduct our balance, we decrease. But bank have not decreased because that person have not presented that check into bank. So bank balance is same. Now there are two ways to make these balances equal. Either we add in cash book or we deduct in passbook. Both ways we can make cash book and passbook equal. Let's take that again. We issued a check, we decreased our balance, check is not presented, bank will not decrease. So there are two ways to correct. Either you decrease it to make these things equal, or situation is like this and you add in cash book, then again these things will be equal. So we can make cash book equals to passbook either by making changes in cash book or by making changes in passbook. But the thing here is, you will make the adjustment only in that thing which is given to you in the question. I have already told you that in every question you have one information will be given. Either that will be cash book debit balance, or that will be cash book credit balance, or that will be passbook debit balance, or that will be passbook credit balance. So the first thing you will do is you will write here the balance given to you. If that is a positive balance, you write in the plus column. If that is a negative balance, you write in the negative column. And you will make changes, means you will add or deduct only in that book which is given to you in the question. So like if you have given a cash book, you have to add or less only in cash book to make cash book equal to passbook. You will not make any changes in the passbook. Same way, if you have passbook is given in the very beginning of the question, you will make the necessary addition or subtraction only from the passbook, not in cash. Okay, so I hope this thing is clear to you. This way we will do every question. So let's see question number 1. So in question number 1, it is given that Rimchim Limited maintains a current account with the State Bank of India, and on 31st March 18, the bank column of its cash book showed a debit balance of 1,54,300. So it is given in the question that we have given a debit balance in our cash book bank column. So as that is a debit balance, right here debit balance as per cash book, because we are giving a balance as per cash book. So right here debit balance as per cash book. Now we are knowing that debit balance means a positive balance in cash book. So write in the plus column. That's why it is necessary to know which balance is a positive balance, means balance, and which balance is a negative balance, means overdraft. Because that will be balance, we write in the plus column. If that is negative balance, means overdraft, we write in the negative column. Okay. Now with this information that we are having a balance as per cash book, means whatever the addition or subtraction we will do only in the cash book, because we have cash book given in the question. So let's see what are the differences due to which our cash book is not getting matched with the passbook. So the first point here given is check deposited but not credited by the bank, 75,450. Now see one, check deposited means we received check from someone, we increased our balance, but that is not credited by bank, means bank have not increased. So you increase, bank have not increased. So what you will do? Either you can increase in passbook or you can decrease in cash book, but you will make changes only in the cash book. So you will do what? You will decrease. So you will write in the minus column 75,450, and you will write the information here. Check deposited but not credited by bank, right? So check deposited but not credited by bank. Okay, right. So I hope this point is clear. Now let's see what is the second point. So the second point says check issued but not presented for payment. We have issued a check but that is not presented for payment. Means at the time of issuing check, giving check to someone, firstly you will decrease in cash book, you decrease, but that is not presented, means bank have not decreased. So what you will do? Either you can decrease in passbook or you can increase in cash book to make equal, but you will make changes in cash book. So you will do what? You will increase in cash book. So write in the plus column 80760, and that is what? Check issued but not presented for payment, right? Okay, that is the thing. Now let's see the next point. The third point is bank charges not yet recorded in cash book 1,135. Now see one thing. Bank charges not recorded in cash book means what? If bank will apply some charge, bank will deduct your money from your passbook. But you have no information that is not recorded in cash book, you have not decreased. So what you will do to make it equal? You will decrease. So you will decrease in cash book, you will write in the minus column bank charges not recorded in cash book. Okay, right. That was our point number 3. Now let's see the point number 4. Next point is check received by the bank directly from the debtors, 1,35,300. Now see one thing. Whenever bank will receive a check from customer, bank will increase your balance because bank got some check for your account, so bank increase your balance, but you have no information, so you have not increased. So what you will do to make it equal? You will increase. So you will write in the plus column 1,35,200 direct deposit by customer. Okay, you can write it also like check directly deposited by customer. Now the next point is insurance premium paid by bank as per standing instruction but not yet recorded in cash book 15,400. Now bank has made some payment as per your standing instruction. You have already told the bank that pay every month this much amount from my bank account. So bank paid some money. So whenever bank will pay money, bank will decrease your balance. But you have no information, so you have not decreased. So what you will do to make it equal? You will decrease. So you will decrease, you will write in the minus column, then you will write what? Direct or insurance premium paid as per standing instruction but not recorded in cash book. Here it is not necessary that you write the same wordings given in the question. It's your choice, you can write anything, but that should interpret the same meaning given in the question. The next point is dividend collected by bank but not recorded in cash book 1,000. Now bank collected some dividend. Dividend is a profit on shares. Whenever you buy a share of a company, company will give you dividend. So bank collected some dividend, bank increased your balance. You have no information, you have not increased. So what you will do? You will increase in cash book to make it equal. You will write 1,000 in plus column, dividend collected by you. Okay, right. So we are done with all the information. Now what we will do? We will total the columns. You will total plus column as well as you will total minus column. So let's see the total. So we have totaled the both sides. The plus side total is 2,71,260 and the minus side total is 91,985. Now after getting the total of both sides, you have to do what? You have to find the difference. And if you see, if you make the calculation, you will get a difference of 2,79,275. Now where we have to write the difference? You will write the difference on that side, which side is more. Here we have plus side is more, so we will write the difference on the plus side 279, 275. Now see what we have to do. We are getting a difference on the plus side, right? Plus side is more, so we will write, as that is plus side, so we will write here what? Balance. If that is on the minus side, you will write what? Overdraft. Now you have written here cash book, you will write what? Past. So that is balance as per past, right? So this way you can solve the question of bank reconciliation statement. So the only thing that you need to remember, if we have given a cash book debit balance, we will make the necessary changes in cash book. If we have given a past, we will make the necessary changes in past. If we have a positive balance, we will write in the plus column, and if we have a negative balance, we will write in the minus. Okay, so that's it for today's video. This is Rakesh Shukla signing.